Gold prices spiked to fresh all-time highs in all major currencies, except the Swiss franc, at the start of Asian trade Monday morning, before erasing all that move and more, as traders repriced a rate cut by the US Federal Reserve as early as March 2024, following subtle comments from the central bank's chairman Jerome Powell, writes Atsuko Whitehouse at BullionVault. Gold priced in the US dollar surged to a record $2,143 per troy ounce, almost $70 above the previous record gold high, briefly touched in May. Wholesale bullion in euro terms rocketed 3.5% above it, prior high to reach €1,967, and the UK gold price in pounds per ounce touched £1,685, some 1.6% above the peak set in the aftermath of Hamas's terrorist attack on southern Israel in early October. The yellow metal then cut its overnight gains and fell further, trading back at $2,025 per ounce, £1,605 and €1,870, even as new US data said factory orders sank in October, signaling a slower economy. Gold has simply become a proxy for a Fed rate cut expectations, says Nikki Shields, head of metals strategy at Swiss refining and finance group MKS PAMP. Lower interest rates reduce the opportunity cost of holding zero-yield gold, and betting on the Fed's 2024 policy meetings leapt Friday to put a near 2-in-3 shot on the central bank, starting to cut its key rate from today's two-decade high of 5.33% as early as March. But that certainty fell back following gold's overnight spike Monday, dropping 5 whole percentage points to 58.4%, according to the FedWatch tool from derivatives exchange at CME. The strong actions we have taken have moved our policy rate well into restrictive territory, said Fed Chair Powell in a speech on Friday, a notable shift of tone from simply saying restrictive a few weeks before, according to Jeffrey Roach, chief economist for $1.1 trillion broker-dealer LPL Financial. I think it's fair for markets to latch on to that subtlety. With the Fed's last rates decision of 2023 due next week, Powell also noted on Friday that the core measure of consumer price inflation averaged 2.5% per year over the 6 months ending in October, near the Fed's 2% target. Inflation on the Fed's preferred measure, the core personal consumption expenditures index, which also strips out food and fuel costs, meantime slowed from 3.7% to 3.5% per year in October, new data said last week, in line with expectations. There's no evidence that we are stuck at 3% inflation, said Chicago Fed President and voting policymaker Austin Goolsbee on Friday, forecasting that the pace of increase in the cost of living will fall back to the Fed's 2% target. But today's retreat in gold prices from Monday's new all-time highs came alongside a rebound in longer-term borrowing costs on the bond market, where 10-year US Treasury yields, a benchmark rate for government, as well as many finance and commercial borrowing costs, edged higher to 4.25% per annum after dropping to the lowest since early September, as Powell's comment coincided with worse-than-expected US manufacturing survey data. That saw Western stock markets slip, with the tech-heavy Nasdaq index in New York losing 1% from Friday's 22-month high and contrasting with a further rise to new all-time highs for India's Sensex overnight and new 18-month highs for cryptocurrency Bitcoin. Despite an attack on US Navy and commercial ships in the Red Sea by Yemen's Iran-backed Houthi rebels on Sunday, oil prices extended last week's decline meanwhile, amid doubt over global demand, as well as over the latest decision on supply cuts from the OPEC Plus cartel of producer nations. Please like this video and subscribe to our channel.